Welcome back to the Malaysia Money Matters show. It's the 1st of August 25. Today, we're doing a deep dive into some key financial and economic updates, covering what's happening right here in Malaysia and on the bigger global stage, too. We'll kick things off with Malaysian companies and then zoom out internationally.
Sounds good. And it's interesting, isn't it, how these local moves are setting the stage for the future, even with all the, global uncertainties swirling around.
Absolutely. Let's start with something quite significant for many Malaysians' retirement planning. The government's looking at a potential change for EPF pension payouts.
Yes, the monthly payout idea.
Exactly. So instead of just the lump sum option, they're considering adding a monthly pension payment. This is part of the 13th Malaysia Plan. The idea is to give retirees a more stable income.
Right, more predictable. Building on that solid 6.3% dividend EPF managed in 2024. And this isn't just a minor adjustment, is it? It really could change how people think about their retirement nest egg, moving from, say, a single large sum to ongoing income. Interesting implications for spending patterns later in life.
Definitely a response to the aging population, too, I think.
For sure.
Now, speaking of long-term planning, let's look at some companies making moves. Gamuda, for instance. Their infrastructure side looks set for a boom.
Oh, yeah. What's driving that?
Well, they've been shortlisted for some major metro station projects over in Sydney, Australia. That's a big one. Plus, domestically, they're bidding on data centers, water projects. Quite diversified.
Wow, Sydney. That's quite a coup. It really shows Malaysian firms competing on the global stage now, doesn't it? Leveraging that local expertise internationally.
It does. And it's not just expansion. Some are focusing, streamlining, like Chin Hin Group. They're selling off their steel wire unit for RM 70 million.
Strategic investment.
Looks like it. They expect a gain of about RM 6.1 million. The idea seems to be, improve cash flow, maybe fund other ventures.
Makes sense. Shedding non-core assets, maybe.
Seems that way. And similarly, DRB Hikam just bought the rest of Scott and English Malaysia, about RM 20 million. Now they've got full ownership of properties with rental income, plus maybe redevelopment potential down the line.
Okay, so consolidating assets, optimizing value there. It points to a trend, perhaps. Companies sharpening their focus on what really drives growth or stability for them.
Could be. And moving beyond traditional areas, we're seeing growth in smart city tech. ITMAX System landed a huge contract in Johor Bahru.
Oh, the smart traffic lights.
That's the one. RM 145 million, and it's a 20-year deal. Big focus on traffic efficiency and hitting Johor's environmental and social goals, too.
20 years, that's a long horizon. Shows real commitment to that kind of tech-driven urban development.
It does. And speaking of long-term income streams, Dialogue Group looks set for a boost in Pengerang.
Good news for them. It's been a bit quiet there recently, hasn't it?
Yeah, this new 25-year storage and handling deal should bring in about RM 10 to 15 million in recurring profit annually, starting early 2029.
That's a significant stable income source. Good for them.
Then there's Perdana Petroleum. They've secured an RM 11.6 million contract for an accommodation work barge. Interestingly, it's from their major shareholder, Dayang Enterprise.
Right, an intra-group deal. Probably about maximizing vessel use for offshore work, keeping things efficient within the group.
Makes sense. And staying with company strategy, CAB Kakaran Corp, the poultry producer, they're making a big move acquiring Cargill feed for RM 231 million cash deal.
Wow, buying their feed supplier. That's vertical integration.
Exactly. The goal seems to be producing their own animal feed, should give them more control over quality, consistency, and, less reliance on outside suppliers.
Big strategic shift for them. Could improve margins if they manage it well.
Now, a bit of a challenge for Tenaga Nasional. They're facing some hefty additional tax bills over RM 1.4 billion for 2022 and 2023.
Oof, that's substantial. What's that about?
It relates to a federal court ruling on reinvestment allowances. TNB is looking at their legal options, but yeah, it could definitely impact earnings.
Something to watch there. Tax disputes can be complex.
Definitely. And on the listing front, UMS Integration is set to debut on Bursa Malaysia tomorrow, August 1st at RM5.
The dual listing. First Singapore exchange company to do a secondary listing here, right?
That's right. And the shares will be fully fungible. Gives investors direct exposure to their high-precision engineering work, semiconductors, aerospace.
Interesting move. Opens up another avenue for investors.
Finally, on the domestic side, Malaysia's green energy push seems to be accelerating. Sameeting Group, Asia Poly Holdings, High-Tech Purdue, they've all secured bids under the feed-in tariff program.
Okay, so more biomass, biogas, small hydro projects coming online.
Looks like it. Expected to be operational by 2030. It really underscores the national commitment to cleaner energy.
Yeah, aligning with global trends, creating new investment pockets in renewables.
Okay, let's shift gears now to the international and political scene. First up, closer to home, Johor and Singapore.
Hmm.
They're talking about a proposal for a second rapid transit system, RTS-2. This one would connect Tuas and Iskandar Puteri.
Wow, RTS2 already. That signals deepening cooperation, doesn't it? Really focusing on that cross-border connectivity.
It seems so. Long-term planning to ease congestion and boost the economy on both sides.
Makes sense.
Now, something with potentially more immediate impact, U.S. President Trump is set to announce Malaysia's new tariff rate this Friday, August 1st.
The decision after the recent talks. This is a big one. Huge implications for Malaysian businesses, potentially for consumer prices here too. Lots of uncertainty.
Absolutely. It really highlights those ongoing global trade tensions.
You see that uncertainty reflected in the oil markets too, right? Prices are sort of holding steady, even with a surprise jump in U.S. crude stocks.
Yeah, why is that?
Well, markets are weighing the risks from Trump's tariff threats, especially those linked to the Ukraine conflict. It shows how geopolitics and trade policy are constantly influencing commodity prices.
So it's a real balancing act for the market.
Definitely. It's like everyone's holding their breath, waiting to see how these big political moves play out.
Okay, shifting focus again, Taiwan's economy. Really impressive growth in Q2. Fastest in 4 years.
Driven by AI, wasn't it?
Primarily, yes. A record surge in exports, fueled by the global AI boom. It just underscores Taiwan's critical role in, AI chip production.
Amazing how one tech ways can lift an entire economy like that, even with potential U.S. tariff issues looming for them, too.
True. Meanwhile, over in China, the central bank stepped in recently to stabilize the yuan against the strong U.S. dollar.
Right, trying to limit that currency volatility. It's part of a broader trend we're seeing across Asia, isn't it? Central banks defending their currencies amid all these global shifts in trade talks.
It seems so. A clear signal they want stability.
Vital for trade, for investor confidence.
And finally, back to the U.S. inflation. The PCE price index, the Fed's preferred measure, ticked up in June, 2.6% year-on-year.
Still above the target.
Yeah. And while the Fed held rates steady, there's a sense that maybe tariffs are starting to push up costs for some goods. Adds to the case for caution on monetary policy, I suppose. It's all interconnected, isn't it? What's really fascinating here is seeing Malaysia push forward with these ambitious domestic plans, the EPF reform, green energy, infrastructure, all while navigating these really complex global trade winds and, shifting economic power dynamics.
It really is an intricate dance, like you said, domestic goals meeting international forces head on. So looking at all these pieces, what stands out most to you about the picture they paint of our economic landscape right now, and maybe where it's headed?
That's the big question, isn't it? Constant change, constant adaptation needed.
Indeed. Lots to think about. We encourage you to keep digging deeper with us. Please subscribe to the Malaysia Money Matters podcast to continue getting these deep dives. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.